Hello and welcome to this lesson. So in this lesson we're looking at an example of a swing trade setup using the order block trading strategy. So basically when we are looking at the order block trading strategy, the first thing we want to do is we want to determine the higher time frame order flow. So we are going to go into the weekly chart. So this is the Australian dollar daily chart. We are going to go into the weekly chart and look at the order flow first. Then we're going to come back to the daily chart to break down that setup. So let's go to the weekly chart. So on the weekly chart, we had the market actually took out some form of buy side liquidity back here. So it took out buy side liquidity back here. So this is buy side liquidity. So it took out some buy side liquidity back here. After taking out those buy side liquidity, the market actually changed order flow to bearish. So you can see this aggressive move lower, making the market bearish. So our setup example is going to come in this candle here, where we're going to look at now the daily chart when it created that bearish order block, so that we can break down the setup. So let's head over back to the daily chart. So as you can see, once that liquidity was taken out, the order flow shifted to bearish. So we got even a break instruction on the daily chart right here, which was a clear indication of bearishness after that break-in structure was confirmed. So once we got that confirmation, any new order block that is being formed here, where basically any bullish candle is a potential bearish order block, because once we break below it and we confirm it, then it is a potential bearish order block. So our example is here. This is a bearish order block that we are considering. So the market was still dropping. So we already outlined how you can enter, you can exit, and you can maybe place your stop loss. So I'm just going to demonstrate here using an example how you could have engaged in these charts using this order block. So this is the order block here. We know that the market is bearish, and then our entry now comes in. So I'm going to use the low of the break of the order block here, just as an example. So our entry comes in at the low of the order block, and then stop loss, I'm going to use the high of the order block, maybe just add a few pips above it. Then the take profit level, I'm going to use this loss down here. So these are the lows that I'm going to use now for take profit. So you can see how aggressive the market actually drops. So maybe if we look at this, this was too close. So these were the ideal exit points. So you can see this, using this order block, we have just executed. So basically the retest of the order block occurred here. So this is the exact entry point you should have taken at that time. If you had been executing this market, this is the exact entry point. So this is the candle you'll have used now for your entry. So as the market was coming back up into this low of the order block, then that's your entry right there. Then you wait for the market now to reach those levels and you exit your position. Maybe you place your take profit level, but make sure as it moves in your favor, you're taking also partials. So maybe you can take some partials off along the way. So maybe just before you hit that low, you can maybe make sure that you take the first partial and then you wait for that take profit level to be hit. So that's just one of the examples. So remember that this is a swing trade setup. And if you look at that entry, when you enter there, basically your exit comes in after 5 days. So that's an example of a swing trade setup. So you have to be very patient with swing trading. So basically that's it. That's the example. You're going to look at more examples. So thank you so much for watching. I'll see you in the next lesson.